Welcome to The Explainer. Today, we are breaking down a massive, and I mean massive, structural shift that has completely rewired the Indian stock market. What used to be, kind of like a house of cards, is now being called a financial fortress. Let's get into it.
Okay, let's just pause on this for a second, because this one sentence is a huge deal. For as long as anyone can remember, the golden rule was simple. Foreign money called the shots in India. But that rule, it's been shattered. And that's created a whole new reality, one that's both powerful and, well, pretty complex.
So, what's replaced that old, fragile system? Well, India has built what we're calling a financial fortress. And the crazy part is, the people who built it weren't big foreign banks. It was millions of its own citizens. It's a total flip in who's actually funding the market.
And this timeline, wow, it just lays it out so clearly. I mean, look at the last 15 years or so. We've gone from a market completely at the mercy of foreign institutional investors, the big overseas funds or FIIs, to this transition phase. And now we're smack in the middle of a domestic liquidity era. Local money is the new backstop. So what does this actually look like when things get scary? Well, before 2014, if foreign money ran for the hills, the market didn't just fall, it crashed. But look at the difference now. Between 2022 and 2025, those same foreign investors sold off billions. And the fortress, it bent, for sure. But it didn't break. Why? Because this time, domestic investors were right there buying what they were selling. And the bedrock of this whole fortress is a phenomenon called retail financialization. It sounds complicated, but it's not. It's just a huge generational change. For years, people put their savings into physical stuff, like gold or property. Now, households are systematically pouring that money into the market through things like mutual funds and SIPs. It's created this incredible, steady river of cash flowing in every single month. Which brings us to a really interesting puzzle. If India's market is so tough, so resilient, why hasn't it been shooting for the moon? Why has it felt kind of stuck lately? This is where the story takes a fascinating turn. So let's zoom out and look at the global stage for a second and see how this new resilience is actually stacking up against everyone else. Because, being stable is great, but performance is what really counts. Now, this scoreboard is what makes this whole thing so interesting. I mean, India is the world's fastest growing large economy, but its stock market has actually been outpaced recently. You see it there at number 5, just got overtaken by Japan. So what does that tell us? It tells us that while domestic money has built a really stable floor, it hasn't, at least not yet, provided the fuel for global outperformance. To solve this puzzle, we have to figure out why that foreign money, the so-called smart money that used to run the show, has been heading for the exits. Their absence is the real missing piece here. And it really just boils down to two big things, neither of which has anything to do with India's own strength. The first is some geopolitical drama, and the second is just a simple, cold calculation about where to find the best deals on the planet. So first up, geopolitics. In late 2025, things got a little tense between the US and India over India's energy policy, specifically buying discounted oil from Russia. The talk of possible tariffs made big global investors pretty nervous, and they just hit pause on putting new money to work. And then you've got the simple valuation game. See, foreign investors are tactical. Money flows where the bargains are. In 2025, after a pretty rough patch, other markets like China started to look really cheap. But India, because its own investors kept it stable, looked kind of expensive in comparison. So the key thing to get here is foreign money didn't leave because India was weak. It left because other places looked like a better deal. But that's all changing. A US-India trade deal was just signed on February 2nd, 2026. So that geopolitical cloud is gone. And that means the stage is now set for a really powerful reversal, and maybe the return of all that foreign cash. And the biggest catalyst of all is right on the horizon. When the U.S. Federal Reserve starts cutting interest rates, which everyone expects around the middle of 2026, it's like opening the floodgates for global money. And all that cash is going to be looking for a new home, and high-growth places like India are right at the top of the list. This chart does a great job of showing the double engine idea. You've got your first engine, the domestic investors, just chugging along, steady and consistent. Now, imagine you restart that second engine, the foreign investors. That's not a train engine, that's a rocket engine, one that could bring a massive surge of new capital into the market. So what happens then?
Well, you get what could be a massive supply-demand squeeze. You've got two huge pools of money all of a sudden fighting over the same limited number of good stocks. And, basic economics tells you what happens next. Prices could get driven up to whole new levels. But hold on, before we get too excited about all the upside, we have to be realistic. This new domestic-powered fortress, it's got its own unique problems. And the truth is, it's never really been battle-tested. And as this shows, there are some hidden risks inside the walls of the fortress. First, there's a huge concentration risk. A tiny number of giant domestic funds control a massive chunk of the market. What if they all decide to sell at the same time? Second, that steady flow of SIP money can create valuation bubbles, pushing prices up and up, even if a company's earnings aren't growing. And the third one, this is the big unknown. This whole SIP culture has never really been through a long, painful, multi-year bear market. Will people stick with it, or will they panic? So at the end of the day, this is really the main thing to take away. India's own investors, they've built an incredibly stable floor under the market, making it safer from global shocks. But it's the foreign investors who hold the fuel for the potential rocket launch. And that leaves us with the big question for the next few years, doesn't it? Is this fortress a launchpad for incredible growth? Or is it just a beautiful bubble that's waiting for a test it's never had to face? We'll be watching.